Oh, Mystic all the way.
Huh?
No, that's a team.
Oh.
That's a team. I'm Team Valor, you're Team Mystic, but which Pokemon did you catch?
I have no idea. How do I figure that out?
Well, you should know what you caught.
Really?
Well, you don't have to. That's okay.
Oh boy! Now all right.
I bet you got with the Charmander.
See, the problem is I have to leave my house to catch these damn things.
You could win all Pokemon with a Charmander if you keep leveling up and only use Mega Punch. We've talked about this in a podcast before.
I don't know what a Mega Punch is.
I'm going to give all three of you a Mega Punch. You know what I've caught? I've caught a tremendous case of boredom right now.
The advice provided on this podcast is general advice only. All statements made are considered by the participants to be accurate, but accuracy cannot be guaranteed. It has been prepared without taking into account your objectives, financial situation, or needs. All participants in this podcast may have a financial interest in any or all of the products or securities mentioned. Before acting on this advice, you should consider the appropriateness of the advice, having regard to your own objective, financial situations, and needs. If any private products are detailed on this website, you should obtain a product disclosure statement relating to the products and consider its contents before making any decisions. Where quoted, past performance is not indicative of future results.
Welcome to episode 30 of The Money Path with Bob Iacchino and Mike Arnold, founders of Path Trading Partners. Joining the show today is Alexandra Lively. She was a Chicago News Bureau chief at the CME Group, reporting on global financial markets. For the past year, she's been working on food security for the United Nations. Our What in the Why segment is sponsored by MotiveWave. Now let's join the conversation with Alexandra, Bob, and Mike, already in progress.
Oh my goodness, who's been hacking the entire time, and is that going to be happening the entire show?
Sorry, no, that was me. Sorry.
I don't know who me is.
That was me. How about that? I'm eating cherries and I just choked on a pit.
Did you know if you chew into cherry pit, it has cyanide in it, and if you eat too many of them, maybe you're choking for a bad reason.
How many would you have to eat?
Well, I heard chewing and activating only 2 of them. Swallowing them.
Mr. Bond, if you get caught, eat these cherries.
Eat this bowl of cherry pits.
All right, I'm looking this up. This is 8 foods that can kill you if you eat enough of them. I want to actually know how. There's actually a slideshow on this. Look at this. There
is actually a slideshow?
Yes. I want to know how deadly cherry pits really are.
2 of them if they are open, but it's very hard to open them. I doubt.
Is it true that 2 cherry pits contain enough cyanide to kill you?
Yes.
This is fascinating.
This is true?
I don't know. Your body needs the pit of a cherry contains.
Yes. Why do you have me on here if you don't believe what I'm saying?
Hold on. I'm going to go to Gizmodo because they always know.
Okay.
Technically, cherry pits don't contain cyanide. They contain amygdalin. There are enzymes in the gut that can turn amygdalin into cyanide, but the body regularly deals with small amounts of cyanide because quite a few things contain some amygdalin.
Yes.
Let's see. In this case, consuming a cherry pit can be very, very dangerous. Oh.
Apple seeds and cherry pits both contain cyanide when ingested.
So this is Bob's last show.
I'm eating cherries. Hang on. I'm eating cherries for a medicinal reason, for the positive reasons of cherries. I'm not trying to kill myself. I'm trying to relieve 2 issues I'm having today.
What do you eat cherries for? To what issues?
And cherries are they have anti-inflammatory agents, and I'm feeling inflamed. And I went to the Cubs Sox game last night, and I ate 5 hot dogs.
Oh, geez.
So they also have a lot of fiber. So I'll stop the explanation at that.
And that's our sports corner.
How would you eat 5 hot? Well, what was the cost of 5 hot dogs at the game?
$7,500.
No, I mean, how much does a hot dog go for at the?
About $2.50 to $3, depending on if you're getting them with onions or without. But here's the thing: hot dogs have a certain effect on me, and cherries counter that effect.
I really don't want to
I think
know.
you're using the hot dogs in the incorrect way.
Well, no, I'm exit only back there. I'm just saying that.
You're Brexit only?
I'm Brexit only. What would a hot dog exit be? A exit? The hot dogs are trying to exit and they're not, and I'm asking for the cherries.
So you're trying to end it by chewing cherry seeds to end all the pain.
I don't feel I need to kill myself. I just need an exit. A hot dog exit. A exit.
Alexandra?
Yes.
Have you heard this show before?
Yeah.
And what do you think of this show, and do you have any critique?
But no, overall, I like the show. I like the content, and the energy is good. It's not boring. It's not just, okay, so earnings came out today.
That was really
that was an impression of Mike.
Hey, I control the disconnect buttons.
Yes, you do. I mean, what do we consider your industry right now, Allie? Is it it's food based still? Right?
Yes, absolutely. It's food based, and really a lot of it looking into tech as well, because egg tech, huge. Egg, A-G, not E-G-G. And yes, so really looking at how farmers and companies are utilizing technology for various things, whether it's solving food insecurity issues, malnutrition, the protein content of wheat. I mean, Google even recently started
what did they do?
What did they do?
Well, no, because a lot of people don't really think about this when they look at Google. They implemented green tech by using this leafy green machine to feed and educate its employers. So I believe that's actually what it's called, the leafy green machine.
I don't know a mean green machine. What's a leafy green machine?
It's where you would grow food on site. I believe that it would have come from a startup. I don't believe it's Google's own product. They may have bought it, but yeah, in terms of looking at agriculture technology, I mean, drones have been huge. We're huge. They still are. Up in Canada, they're looking at all the wheat and canola right now with drones. So.
To take a step back, I'm curious. What is the size of this leafy green machine? Is it closet size? Is it larger? Is it something that? How large is this object?
The leafy green machine. It seems like it could be semi type. It's like it comes in a freight, where it's just a freight farm basically. So you can go in and basically grow from seed to harvest, and then they even have an app so that you can remotely monitor your food. And I mean, we're very what the Martian style.
It's a hydroponic environment in a shipping container, right?
Yes.
Okay.
Yes.
Well, now they're using these vertical farms, these vertical growing farms, which they don't even do hydroponics anymore. It's fascinating. There's huge ones in New Jersey now that's growing tons of these food. They're starting to build them even west of Chicago.
Yeah.
So let me ask you a question. This is really cool. So I'm just looking at leafy green machine, also called a freight farm. And it says growing vertically inside the container maximizes space for food production. And they said it's basically in a 40-foot container, like she described, a 40 by 8 by 9.5 shipping container. So is this bad for farmers? I mean, I know that so one of the things I've always wondered about is you talk about overpopulation in the world. And then I drive through Indiana and I realize there's space for like 8 billion people as I drive down frickin' I-65. I mean, there's so much land that's used to grow things. And do we wonder if this freight farming, is that bad for farmers, good for farmers, or is it sort of neutral?
I believe it's neutral. I don't think this really has, I mean, local farmers market could see hit, but really when you're looking at the amount of bushels of corn and the wheat and soybeans, what they're actually being used for, turned into, so corn, ethanol, the wheat exports, animal feed, when looking at everything that those products are turned into that actually don't, a lot of it don't even end up for human consumption, this really doesn't have a tremendous impact. I think it's mostly important in terms of education and having access to healthy food, because let's say hypothetically, even though of course farmers markets would likely be next to the Googleplex, freight farms could be placed anywhere, and even in places in Chicago where, let's say, you don't have access to nutritious food.
Yeah, Alexandra, you've heard the term food desert, correct?
Yes.
Right. So a food desert is where, and Chicago's a perfect example. Food isn't grown in quantity to serve the residents of Chicago. So of course we have to ship it in with oil, electricity. I see this as a real solution for the food desert problem for the future.
Yes, absolutely. Yeah, and to go along with that, that's why I believe it's neutral for farmers. I don't see it as a negative. I don't see it as a positive in terms of our farmers' bottom line, unless they are specifically just doing organic farming or doing farming where they're going into farmers markets.
I think they should have parked one of these things outside the ball game that Bob went to last night so he wouldn't have eaten 5 hot dogs.
What if that would have been a veggie hot dog? Also good for farmers.
Or what if they make a shipping crate that just makes hot dogs?
Then Bob is a happy guy.
Then Bob's going to eat a lot more cherries.
Hey, to turn this back to markets and stuff, like Google tried to buy a company called Impossible Foods. And they supposedly tried to offer between 200 and 300 million for it. Impossible Foods wasn't ready to sell. And what they have apparently developed or supposedly developed is a cheeseburger made entirely from plants. So it's 100% vegan cheeseburger. And food critics have been unable to discern between meat and this particular product. So literally, like, they brought food critics into a room, gave them both burgers, and they said, pick which one's fake. And they weren't able to do it with any level of accuracy.
Well, that would make a lot of farmers upset, I can tell you that. I know a lot of cattle and ranchers, and they wouldn't like that too much. And I don't know how I feel about more people being, I'm vegan. I thought you were going to straighten that out.
No, yeah, I'm vegan, 5 hot dogs. It's interesting to think that, like, when you think about farming, most people, including myself, think about plants. I don't even think about cattle guys when I think about farming, but they're a massive part of it, aren't they?
Yes, absolutely. Major factor, especially, here in Chicago, and everyone remembers the famous scene with pork bellies. They're obviously not traded now, but...
And it was the hub for shipping meat and pork products across the country.
Yes.
Pork bellies aren't traded anymore?
No. Saddest thing ever.
Really? So we only have live cattle?
Live cattle, feeder cattle, hogs.
Lean hogs?
Hogs.
Yeah.
Hogs. Why'd pork bellies stop getting traded?
I believe there was a lot of insider trading and bad things going on. No.
Not in Chicago.
No, never. Not in Chicago. Believe it was just the volatility. I mean, that's really how everything stops being traded. There wasn't a large volume. They usually called it a very small group or a small industry of people and companies trading it. So I believe it got to where it wasn't profitable to trade anymore.
Bob, I got a good segue.
Well, this will be good. Go ahead.
No. We were just talking about sort of insider trading. Well, did you see that Netflix popped this week?
I thought you were going to talk about the Democratic Convention.
No.
I saw too.
No, this is good.
It was also in the agricultural markets that it would apply to the Democratic Convention.
Yes.
But
Good. And cattle specifically.
Yeah, specifically cattle futures. I did see that, Mike.
That we were poised to actually trigger a monthly double top yet again, but it looks like it's thwarted again. We'll have to wait for another month. One of their directors, Jay Hogue, bought 600,000 shares in 3 trading sessions in a row, and he came in and bought it at average price of $86.43, and we're now popped up to $91.08. So we've talked about this. The monthly double is not triggered yet again due to insider buying. Not the same as insider trading, insider buying. It was close.
Insider buying legal. Insider trading
buying
not
is legal. We're not saying that he did anything wrong. But
yeah, the range of the range of price in Netflix looks like it's ready to expand. It's been a pretty tight range the last couple of days. There was that huge gap down that we saw in earnings, and it popped up from there on the insider trading. Oh, insider buying.
Insider buying. There is a really strong line in the sand at that 85 level, though. So, and we have not filled the gap yet from the sell-off due to the earnings miss. That we would be required to really get back up to the 98 level before that gap is filled.
Right.
Mike, does a double bottom, is that basically an inverse of what a double top is? Is that the same sort of chart?
Yes, it's the double bottom is if it's triggered as a bullish pattern that predicts a rise in the share price. A double top is a topping pattern that predicts a fall in the share price.
Netflix put out reports on original programming. They put it into their financial statements and some of their plans about original programming. How popular do we think Netflix original programming can get? Do you watch any of it? Do your peers watch any of it?
Yes, that's why I think there already had to have been a substantial amount of popularity there. I mean, the first thing that comes to mind, Orange is the New Black. I know, very good for their lineup. I just saw an increase in my monthly cost, though, so I'm not quite sure if I'm happy about all the additions because I don't know how long. Well, I always joke that I do marathons, and that's for TV. So Netflix is my marathons. I do not run. But no, I could see this being very popular. I know a lot of people watch these in just one weekend even, trying to get through the seasons. So,
Mike, this is one of the things that people are talking about that could save the stock. I mean, because as we both can see from looking at the chart, Netflix has had a rough go of it this year specifically. And one of the things that people think can bring the stock back up to its $133 highs is original programming in India. That's one of the things that they've actually announced a few months back that they were going to do is they were going to start creating original programming for the Indian market. And that's something that nobody really has thought about or done yet. And that market's so big.
Well, we will have to see how that unfolds with their international subscriber base. So
yeah, I mean, look, the cost of Netflix, at least in U.S. dollars, is about the average weekly income of somebody in India. So it's not that easy to just say, hey, but we got good shows. Give me a week's worth of your pay to watch some good shows. I don't know how that's going to work, but we'll see. We
should also follow up on another one of the FANG stocks, Facebook, because I was talking about a couple upside targets last week, which were 124.25 and 128.50. We rallied up to 128.33 as the high this week. So I would not be surprised to see another slight pullback before it could possibly go higher. But we've also talked about rallies. What's been going on with the NASDAQ, Bob?
Well, when you look at Facebook, Alphabet, Amazon, those are big components of the NASDAQ, right? So when you have beats, especially in somebody like a Facebook, that's pretty big. I mean, that's pretty big for the overall indice. Do we say indexes or indice?
Indices.
Which one do we say?
Indices.
We say indices. Mike, do you want to look that up?
No, I don't want to look that up because it doesn't bother me.
Well, you didn't believe her on the cyanide. Well, anyway, we had made.
I didn't disbelieve her. I was verified. You know what? If somebody buy a stock, do you just blindly buy it, Bob?
All right. Here's the thing. We called for a NASDAQ rally. We called for it on futures, the Futures Institute video that I did for the CME. Mike came up with an options trade. We talked about the NASDAQ being the best place to express a long opinion because the Dow and the S&P had broken out, and NASDAQ had not broken out to new all-time highs yet, and it was in a recent sideways channel that we thought would break out and reach up toward its old highs. So the old high for the NASDAQ, happened in December, and that high was around 47.39.75, and we're only about $9 or so away from that now. So, Mike, how do you think the option that we called on would have reacted?
Well, it definitely, the bull call spread definitely has made a substantial amount of money, but it's set still for the September time frame. So, I mean, the NASDAQ can hang out up here, continue to rally, and the spread will keep working. Another interesting thing, since that Brexit low,
Yeah.
we've rallied 16 up days, and only 7 days where the close was less than the open.
Wow.
It's pretty much gone vertical pretty quickly, so I wouldn't be surprised to see a slight pause, which is why, I mean, I wasn't expecting it to get to this level this fast, but it did. So there's definitely on that call spread with that call we shorted up at this level, we're still going to be able to take in that time decay, and the spread will keep maturing.
Yeah.
Another good call for crude.
Yeah, crude oil. We were on. I always say we. It's me that's on the TV, but Mike and I talk about what I'm going to say from a standpoint of when they ask us to recommend trades, and that's what they ask us to do on Futures Now. So yeah, we were on Futures Now, and I always say we because when they ask us to call out a trade, which Futures Institute, which is the CME Group's web channel, and then Futures Now, which is CNBC, both online and broadcast. When they ask us to call out a trade, which both of them do, I usually talk to Mike about what the trade should be, so the two of us agree on what we're talking about. But the crude oil trade we called out on Futures Now, which I think, Stafford, you have that video?
I think you can see the selling of rallies kind of take over here. So I'm looking for a close below 44.78. If that happens, I'm going to sell any rally into the mid-50s, so sell 45.50, stop around 47.10. I'm looking for 43.35. And if we get below that, 41.90 is really, really easy.
We called out that short trade, and, you know, again, as you just heard in the video, we wanted to sell a rally. We got the rally. The rally went through the price we wanted to sell at, which is about 45.50. Up to somewhere in the high 46s. Our stop was going to be at 47.10, never got there. And then we were talking about that $43 price and that $41.90 price, which both were hit yesterday. So this is the little teaching moment here. When you trade, you put on a trade, you plan the trade out before you do it, which we did in this particular one. And even though it rallied a good $1.18 above our entry price, we still stuck with the trade that we had planned out. So again, quick teaching moment, you plan the trade and then you stick to it. This trade ended up being a pretty good moneymaker.
So do you think, what's your outlook real quick now, like 30-second outlook on crude?
It's interesting. I met Alexandra because she used to interview me when she was a news bureau chief at the Board of Trade, mostly crude oil. So crude oil has kind of become my thing, even though I've spent the least amount of my career in crude oil. But the crude oil thing is very interesting because it's a really easy supply and demand market. There's either too much crude out there or there's not. There's either very strong demand or there's not. And global demand now seems to be falling, where it looked like about 4 months ago, that it had turned a corner, was increasing, and the data showed that. Now you're seeing demand falling off. You're not seeing a whole lot of change in supply. So 2 weeks ago, there was a big build in crude oil supplies. I'm sorry, a big fall. There was a draw from crude oil, but a big build in gasoline. 2.2 barrels of oil to make 1 barrel of gasoline. So you could tell from that if there's a big build in gasoline, that the very next week there would probably be a build in crude oil because the refineries were not going to want to restock that gasoline. And that's exactly what happened. So I think the fall continues because there was not a huge draw on gasoline this week either.
All right. Did you see Exxon had earnings this morning?
I didn't see Exxon's earnings this morning.
Wow.
What'd they look like? Looked like a big miss to me, I'm guessing.
Big miss. Second quarter's earnings per share came in at 41. They were estimated at 64.
Wow.
And they had a big production miss, too. So that stock, let's see, let me switch to my daily chart of Exxon because it is down. Well, the high it put in its high this year on the 15th of July at 95.55. It has a nice ring to it, 95.55. Now it traded down with his earnings mix to 86. Now it's rallied back slightly to 87.61. It's come down pretty hard, and I'm not surprised to see it bounce a bit, but there's still further room to the downside. I wouldn't be surprised to see this returning to its 200-day moving average, which is around the 84 level.
Well, Bob, I'd like to ask you, so with Caterpillar, their quarterly earnings and revenues on Tuesday, they beat analyst expectations. Now, they're not really optimistic about the outlook for the rest of the year, though. They work in sectors that have been hurt by low commodity prices, weak demand from energy to resource industries, and their chief executive officer said, we're not expecting an upturn in important industries like mining, oil, gas, and rail to happen this year. What's your thought on that?
Yeah, Caterpillar being pessimistic makes me pessimistic. Caterpillar is a proxy for a couple of things. It's a proxy. They're one of the most popular large equipment suppliers in China. So they had huge China business when the stock was rallying a few years back, when it was rallying strong. It was one of those stocks that you just kind of had to be in as China reported GDP, because the GDP was just going straight up and the stock was going just straight up. So if Caterpillar, I mean, we're looking at Caterpillar now being down about 0.5% today or so at where it currently trades. Again, we're recording Friday morning. It's about 10:43 Eastern time. So I'm looking at a last price of about 82.49. It's going to be really, really difficult to get back up into the 100 level with Caterpillar, and it's going to be really difficult for the whole economy to recover if Caterpillar doesn't get stronger. Because while the UK and the US can survive being service economies, the globe still needs manufacturing economies and actual economies that build, like a China or an India or some of the emerging markets. Caterpillar is a proxy for that. So if Caterpillar's pessimistic, it's not good.
Yeah. But I still see the stock price going higher. We broke out of a horizontal channel. Now, the full target on that is around 88.50. We have a target zone of around 86.30 to 88.50. Don't see it getting much above there, but a lot of people are rushing into Caterpillar because it still pays a dividend. It yields about 3.7%, and it seems like anything that's paying yield that people think has some stability. I think it's actually the stock price is outpacing where they're projected in the future, but it doesn't seem to matter. The horizontal channel target tells us where the trade could go to, so it could run higher still over the next few weeks.
I'm going to give you an opportunity to take that back when I tell you that Jim Cramer wants to buy the stock.
That's fine, because
all right, good.
Long term, I see this lower. Short term, we still have a little room to run.
Yeah.
And there have been reports Cargill considering a sale of metals and energy businesses to focus more on food and agricultural activities. What kind of effect do you think that this could have? Commodity
businesses are for sale, man. I mean, we're seeing that. Lehman Brothers. I almost said Lehman Brothers. J.P. Morgan, Citibank, all that were selling their commodities divisions. Commodities are for sale, and again, proxy for a slower global economy. Whether it is a new normal of 1.5% to 2% for the globe, or whether it's a continued fall from the 3.5-4 China-driven growth we've seen in the past, commodities are for sale. Again, same thing with Caterpillar. When you see those kinds of things happening, commodity bull markets tend to run about 10 years. That's just when you look back historically, the bull markets run about 10. This one ran about 11, close to 12. So commodities look long-term lower to me.
Speaking of lower,
here we go.
McDonald's had earnings.
Yeah, I liked McDonald's stocks prior to the earning, and they just completely whiffed.
They came out with net income of $1.09 billion or $1.25 per share on the sales of $6.26 billion. Mm-hmm. But people weren't too keen on it, and it's down. Let's see, this week alone, it's dropped from high of 127.95. Right now, it's trading 118.44. If it does close below 115.85 level, let me get a specific maybe it's 116. If it closes below 116, it's triggered a sloppy double top, which could run it back down to the $100 level over a series of weeks or months.
Is that their new menu item?
What?
Sloppy double top?
Yeah, no. Did you see today they just announced that they're opening a new store that's where you can get unlimited French fries? It's free refills on fries. I just saw that this morning.
There's certain things I think, Alexandra, I don't know if you'll remember this because you were like -2 years old, but they used to have something called the McLean burger. Do you guys remember that, Stafford?
I remember a McLean.
Remember the McLean? Mm-hmm. And after the failed launch of the McLean, which was supposed to be a healthy burger, which it was weird. They used to serve it in two sides of a dish, and when you closed the box, the burger was closed. So like the bread and lettuce and tomato would be on one side and the burger would be on the other side.
That way the burger stayed hot, the other stuff stayed cool.
Yeah, it was weird. But
I wish they just had the McRib all year long. Have they done that yet? Now it's only at certain times in the year. Forget this McLean. I know they're trying for this healthy turn. Sure, they serve salads, but let's be realistic. We're going there now for the unlimited fries. We're going there not
breakfast all the time, right? They did do breakfast all the time.
Yes.
I want McRibs all the time.
Yes, McRibs all the time. And they're big and tasty with cheese was my favorite, and they don't make it anymore. And I said, yes, you do. This is how you make it. And they're like, right.
You do. You will make it for me.
Yes, you do.
It's just a different combination of the products they already have. But no, a lot of the places won't make it for me. So maybe that's why they're taking a hit. Bring back the McRib and the big and tasty with cheese.
All right, tell me what's on a big and tasty with cheese. I really need to know this.
It's so simple. It's just their hamburger patty with the yoga mat added in. It has the lettuce, onion, pickles, cheese, mayo, and mustard and ketchup. I think the only difference maybe is the mayo, but it's basically just a normal hamburger. It's big and it's tasty, and why would they get?
Hold on though. I just looked up this McDonald's secret menu items.
Yeah.
Yes.
I like that one the best. The land, sea, and air burger.
The what?
Land, sea, and air burger.
What's that one?
Oh, probably fish.
Chicken.
It's got the fish, chicken, and a Big Mac all combined into one huge burger.
I'm getting that today.
After
my cherries work, I'm getting that today. Here's my question. Can I ask a question?
No.
First of all, calling it the big and tasty implies the other ones are small and sucky, which is weird. It's like, I want to get the one burger that's tasty. And could they make a small and tasty? I don't know. It's a weird name to me.
Well,
I
just looked it up, and it was designed, according to Wikipedia, so I'm not really fact-checking right now, but it was designed to compete with the Burger King Whopper sandwich. So if you're competing with the Whopper, the big and tasty, I guess. Yeah.
I guess that makes sense. But here's my question. So Microsoft, okay, Microsoft is starting to we talked about Microsoft's earnings last week, and we talked about how they had a big bump in cloud, and we talked about how Microsoft is going away from being a hardware company and becoming a services company. Now, I'm not saying that a food company should do that, but why, when something like the McLean failed, and everybody basically said, look, you go to McDonald's for crappy food. It's hangover food, right? It's fast, it's bad for you, and it's cheap. So keep doing that. But sometimes I think there's changes in culture, and I think that is that kind of thing, that being what McDonald's does well, is eventually going to kill it. Why can't McDonald's buy somebody like a Protein Bar, which is a local chain in Chicago? I think Protein Bar has maybe 12 restaurants now, and they're all about healthy, vegetarian, quinoa. Essentially, it's like a mini Chipotle.
Yeah, I think the success of McDonald's has always been family. Kids. Kids want to have fun. They want to run around. They want some toys. It's a very safe place. There are fun characters. There are other kids there, and the food tastes fantastic from their point of view. And that's really their core market.
As you see them being forced to change things more and more, like being forced to make McNuggets with actual chicken, and being forced to locally source some of their ingredients because some of the scandals that have happened in the production of the food, which is something that, Alexandra knows a lot about. And some of these things, when you see them, it seems to me like McDonald's Corporation should be out there looking for something they can purchase that they can survive on when McDonald's starts to become something that nobody wants. Even parents now, they don't want to bring their kids to McDonald's anymore. They still do, but they're looking for other options. They're looking for other alternatives.
That's true, but I think there's still the aspect where don't try and be something you're not, which I think they were criticized slightly when they tried to bring in healthy menu items with the salads. It's like, no, we're not coming here for that. We're coming here for the Happy Meals, for the McNuggets, because, yeah, the food does taste good. And I would like to say I just joined the Facebook group Bring Back the Big and Tasty Sandwich. I mean, it would be interesting if they expanded and bought, like you said, another company or a different sector, but still kept that outside of their core McDonald's business model, because I think it's worked for them in terms of having the food that they serve.
Yeah, that's what I think they have to do. McDonald's, it has not worked for a McDonald's to come out with healthy menu items. It just doesn't work. So they're going to have to go somewhere, because I'm telling you, 25, 30 years from now, that stock is not going to be loved because the company's not going to be loved. That's just my take on it. I see it with my sister's kids and stuff. She still takes them, but she hates to take them now. And you're seeing it with new younger parents where they're like, yeah, I've never even introduced my kids to McDonald's.
Well, that's a funny thing, even talking about kids. When I was born, one of my gifts was Disney stock and McDonald's stock. Those were the two, because that was kids. That was kid-centered. That just makes you think, I guess, of childhood. So it was a very unique, different gift. But yes, Disney and McDonald's. So I guess that's America.
Yeah.
It's interesting because McDonald's did own a part of Chipotle. They divested themselves in October of 2006. And they also owned part of Boston Market, which they sold in 2007. So they have owned other food companies before, and not really highly publicized that they used to own those.
Now are people giving their kids Apple stock?
Probably. Yeah.
If they could afford it.
It's affordable, even on this big gap up. They did earnings this week. Came in at 142 versus expected 139. Revenue beat 42.4 versus 42.1. So the demise of Apple has been greatly exaggerated. Let's see. What about I don't know what else to say.
The interesting thing about Apple, their new iPhone, the operating system, Siri will now be able to interact with your apps. Now, I'm not exactly sure what that means, because I assume that she was already interacting with the apps. You can tell her to play a song, you can tell her to open a certain app, but it does allow, so she'll be an even better virtual assistant, apparently.
It does require a new version of an app to be released that goes into the hooks inside Siri that Apple has opened up that previously Apple has only used internally, right? So it's not like all your old apps will just work. It will require a new rev of the app to come out that hooks in to the new software APIs, application program interfaces. So it's going to take some time, but they're definitely behind the ball with the other artificial intelligence products that are out there, like from Amazon, Google. Mm-hmm.
Can I tell Siri then to go catch some Pokemon for me?
That was my first thought. I was wondering if that would work. Like, can you virtually walk around and hatch this egg for me?
Well, Nintendo is releasing an actual hardware product you put on your sleeve so you can walk around and catch Pokemon without having to pull your phone out, if I'm not mistaken.
Wow.
Because that pulling the phone out was just too much work.
I believe they have those for people who actually run and have done that before. I don't know why Nintendo's making their own version now. Or does it include something where a smaller handheld thing. Otherwise, just get one of those armbands that they already sell.
This is part of the mobile app, right? So it's a Bluetooth component for that, and where Niantic it owns 70% of the profits. That's why Nintendo went down, because Nintendo didn't get all this money, so that some people pulled out of their stock investment. Nintendo owns 100% of this hardware component that will let people be able to be alerted, and they can just press a button on their shoulder, and boom, they can catch their I can't believe I'm saying this, their Pokemon.
Well, as long as Amazon's going to sell it, then we're all in good shape, because Amazon sells everything now.
Yes, they do.
And they came out with some pretty good earnings.
You know, Jeff Bezos is somebody that is on my list of people I'm most afraid of in the world, because he's just that smart, and he's got a maniacal laugh, and he just scares the crap out of me. And here's a guy, for years, people were making fun of Amazon's valuation and saying, you know, they haven't even made any money. They haven't even made any money. Well, now they've made money for a fifth straight quarter, right? So it is really a story. And, you know, as I mentioned, well, I didn't mention this earlier, but as I was going to mention earlier, is we've got consumer growth now, very good consumer retail growth, largest consumer spending numbers since 2014, and they seem to be spending it all on Amazon, because you're not seeing the brick and mortar retailers follow suit. So,
and they have so many different areas that they cover within that. I mean, within Amazon Prime, you have videos. What you can go grocery shopping. Now they have those trucks flying down the street here in Chicago and everywhere else to deliver the products same day,
bypassing UPS and FedEx.
Yes, absolutely. And the interesting thing, like with Amazon Prime, I have a smart TV, and I go back and forth primarily between Amazon Prime and Netflix. Now, in terms of live streaming, I am able to do YouTube, which I have used, but apparently that's going to save Twitter live streaming video capabilities. Now, what are your guys' thoughts on that?
I've never seen a live stream on Twitter.
I haven't either, but it's getting more and more popular from a standpoint of the companies that are making deals with it. It's going to be a big deal. So one of the things Twitter does really well, to the very few people that use it, is people commenting on live events, right? So now you're going to be able to watch an NFL game this year on Twitter live, and the feed is right next to the picture, the Twitter feed as it's going on. So you can actually watch a game alone with 500,000 people. Or 1 million people, right? Watching a game and commenting on it with each other is what that seemed to me to be a really, really cool thing.
Yeah, it is. They have that on YouTube, but I'm not sure that people necessarily go to YouTube to post their thoughts. I mean, sometimes the comments are very funny to read, but that's not really a place that you necessarily think of people going and expressing their feelings and what's happening. It's more so on Twitter. So I could see that being much more interesting to see on the side via Twitter's partnerships than the YouTube commentary.
Hey, I know we don't like when I loop back, but we switched to Twitter so quickly. It's important to note that Goldman raised their Amazon price target. That's a really important thing. They raised it to $900, which is over 17.5% higher than it is now. Yeah. I like cherries. All right.
Oh, my God.
Yeah, so that it's just an important part to note. Goldman Sachs put that out today after the earnings.
The only thing I see about Twitter is whenever I watch the news, or whenever I watch anything that has to do legal, somebody brings up somebody's Twitter comment from 2 years ago, and they use it as evidence against them. It seems like it's just a liability, hence the reason I have closed my Twitter account.
Well, anything can be. I mean, on TV, I feel like a lot of major networks, that's what they do. Well, Bob, back in 2013, you said this about oil. I could pull that up right now, I'm sure. But no, I mean, you were phenomenal. You called it. No, I'm kidding. But my point is, you're exactly right. Having that easy access to 140 characters of something that really can't go into more explanation. And like you're saying, 1 out of 3, 2 out of 3, 3 out of 3, and those are annoying to follow as well. So yeah, a lot of times you do see people going back and saying, 4 years ago they posted this, they're not qualified for this position or to do that. I am speaking about the presidency here because there have been a lot of tweets going on and a lot of people going really, really, really far back just to see what was either retweeted or what was said. And no, that is a difficult when you're
That's Twitter's biggest liability is the fact that what you say will be used against you.
Isn't that all of social media's biggest liability, though?
Facebook's pretty hard to search.
Yeah, Twitter is really good at, you can express anger really quickly. I've done it here and there. I got to admit I have. The biggest issue I've always had with Twitter is I can't say what I want to say in 140 characters. Anyone that listens to this podcast knows that. Mike lives it every day. I can't say what I want to say in 140 characters. So in January, they were talking about upping the characters to 10,000, which would have seemed insane. Well, what they have announced, they announced it in May, so you guys probably already heard about it already, but things like @name are not going to count towards your 140 characters anymore.
Right, and the bit links and things like that.
Yeah,
so.
Things like that won't count anymore. So they did give people, loudmouths like me, a little bit more room. But you should follow me on Twitter anyway if you're listening to this podcast. Because
and what is your address on Twitter? What is that address?
@Bob @Bob_IHino.
And pathtradingpartners.com, and also check out our YouTube channel and also path_trading on Twitter for our direct Path Trading Partners content.
And also at Alexandra Lively. And you can see my Facebook at alexandra.lively and my website, alexandra.lively.com. It's just alexandralively.com. I just gave away my email. Never mind. But but no, Twitter at Alexandra Lively. I'm sure you can find much more about me on Google. Now, what about their revenue? What are your thoughts here? Yes.
That was a good segue. Mike, go ahead.
I have nothing to say about Google other than they reported a revenue of $21.5 billion, which was up 21% from the same quarter last year. So
far outstripping what analysts had expected.
Whoa.
Well, you know what? They have a that gap up today. They're trading right now at 777.77. There's a sign here.
Seriously?
Yes, they're trading 777.77. I'm looking at it right now.
At what number month is this?
It's the 7th month.
Wow.
But it's the 29th day of the 7th month. So it wasn't completely in sync.
Well, 9 minus 2 is 7, so...
That's right. Okay, you got it. We got the tie-in. There's the world might end today on Google's gap.
I'm actually creeped out by that 9 minus 2 thing.
They're approaching their old highs set back in February of 789.87, so they're within a stone's throw of that.
There's going to be a reckoning with Google at some point, with Alphabet, Goog. They now report their earnings separately between Alphabet and Google Ventures. I'm not sure that that's what they call the company, but what everybody calls their moonshot division, which is these weird investments they make in all kinds of different things. It loses money like crazy.
Yeah, it makes nothing.
It makes no money. So it's one of those things that's weird because they're still the same company. Their revenues are blended internally, but externally for purposes of releasing numbers. They release the other company separately. And that was the company that wanted to buy the faux meat product, for example. They are working on the self-driving car, and they're working on the moon landings, the space program that Google has in place, and all these crazy, good for the planet kind of things. So they report that separately. So at some point, the stock's going to correct to that, but that doesn't mean that it doesn't now, and certainly doesn't mean that the stock goes lower.
I was just doing a projection to see where, because it could break out of this horizontal channel also, and if we do get a confirmed close, the stock price, if it reaches its full target, would be projected to hit 872. Well, let's just round that up to 877.
I'm just glancing at something, an article, Two Sides to Alphabet Story. This article's on benzinga.com. Nilay Patel, editor-in-chief of The Verge, was on Squawk Box Friday morning. Patel stated that it's hard to look at Google's earnings without looking at Samsung's earnings, which were incredible and driven by strong sales of its flagship phone, the Galaxy 7. This indicates that Android's side of Google's house is doing really, really well. The other side of Google's story focuses on distributing and monetizing content. If you open a browser, you're going to do a mobile search. Google is doing a great job of owning and monetizing mobile search, he said. Google obviously has tons of challengers around YouTube, but they are still YouTube. So he's talking about there's two sides to it, and both sides are doing really, really well. And he thinks that you have to watch those in sort of two parts like that. Check out Samsung to see how well Android's doing, and then check out Google to see how well search is doing.
Okay.
Well, I can segue.
No, who's going to segue into GDP?
I'll do it.
Okay, let's hear your wonderful segue, Bob. Come on.
Well, you know what I would really like to look at too is, okay, we have all these earnings, GDP numbers. What are your thoughts here?
Yeah, speaking of GDP, let's talk about GDP. Q2 came out at 1.2%. It was expected at 2.6. And Q1 GDP was revised lower to 0.8 from 1.1. So I've mentioned this in previous podcasts. Barack Obama is the only president in modern history to not have a 3% GDP print. And the trajectory is, now that's not a political statement, okay, because the president has very little to do with GDP. But the trajectory of GDP is maintaining that he will be the only one without 3% GDP print. I maintain there will be one before he's out of office. And I still maintain that I'm not going to believe that number when I see it. It may be revised lower once he's out of office. I don't know. But it just seems like a strange thing. The trajectory's lower. Yeah,
the economy now, in order to match 2015's full year of 2.6% GDP growth, now we'd have to print above 4% in Q3 and Q4. So you'd have to get in order to match next year or last year's GDP, you'd have to get a print above 3, and it have to be above 4 for the next 2 quarters.
But all is okay, though, because Chicago PMI reported higher.
Yeah, it
higher than expectations.
That was tongue in cheek, Bob.
Yeah, I know, higher than expectations. So, but again, there are some
okay, everything's okay.
Look, the Fed spoke this week, right? The Fed had a meeting, and in their statement, they essentially, let's paraphrase, they said that September's back on the table. They claim they're still seeing good data. They're still data dependent, but they're seeing good data. And the consumer spending part was some of that good data. We talked about some decent durable goods. Caterpillar, we talked about, is not doing well. So, yeah, September's back on the table, although I don't see why.
I don't see why, especially with those GDP numbers. I don't see why, but who knows what they're going to do. Or are they just trying to talk the market into, believing them again?
I think they're trying to talk the market into believing them again. I really do.
Now, the IMF, they recently cut their global growth estimate to 3.1 for this year, 3.4% in 2017, and they cited Brexit, but it's been pretty benign so far. So to cite Brexit for 2017 and even lowering it and attributing it to this year, what are your thoughts on focusing primarily on Brexit slowing the world economy and getting worse?
I think it's an excuse. I really do. I think it's a fantastic excuse. The UK is going to be blamed for global growth that was in a lower trajectory anyway. I think it's ridiculous.
We talked about a couple episodes ago where it's going to be whenever something it doesn't go as expected or gets worse, it's going to blame it on Brexit.
Yeah, that's true.
It was a few years ago where every bad economic number was blamed on the weather. I'm sure you guys both remember that.
Yep. Oh, yeah.
It was like everything was the weather. It was the weather. And really, one of the few things the weather does affect is one of the things Allie knows a lot about.
Yeah.
But really quick, we touch on currencies really quick because the Fed talked about September being back on the table, and the dollar doesn't believe her. The dollar does not believe the Fed, does not believe Janet Yellen.
No.
Because we saw dollar weakness against the yen, dollar weakness against the euro, overall dollar index weakness. It just continues to go lower. So the market doesn't believe her. I don't know if you're seeing anything on the charts, Mike, but I'm seeing dollar weakness.
I'm seeing, dollar, we were running up towards that 98 level, and it's reversed strongly this week, which are back down to 95.44 level. Also, did you see what the yen's been doing? The yen wasn't too happy that, they're holding the QE constant. They met last night and leaving rates unchanged. They're upping their ETF purchases, though.
They're upping their ETF purchases
To 6 trillion yen from 3.3 trillion yen, but the yen's getting a lot stronger. It's now down to 102.33. So as it goes down, it actually is strengthening. Since last night, it was trading 106 at one point prior to the meeting.
What is an ETF? Just to interrupt real quick.
It's an exchange-traded fund. So it's essentially a mutual fund traded on an exchange as opposed to getting it through like a financial advisor.
What's just fascinating from stuff we look from a technical perspective is, a couple weeks ago or about 3 weeks ago, we hit that $100 mark. We rallied back straight into the dynamic R zone, which is a technical pattern we use and teach. And now we've rotated back down and should actually target the 100 mark again.
And see, this is a point where I'd like to come in and talk about agriculture, because usually mainstream media, you see people covering the corporate earnings, you see GDP covered, Fed statements covered, and yet agriculture not covered yet. They're paying attention to every single one of those factors. So when you are looking at agriculture overall, not a great day this week. Thursday, we saw December corn hit a new contract low at 338. Some saying that if we see pressure next week, it could accelerate to 280. I'm not quite sure that it would get that far. But a lot of the pressure here on corn was an increase in fund selling. We have strong export sales figures, but there's still a lot of uncertainties over yields, which is a bit strange since, it's after pollination. People should really have a good idea of how their yield is doing. My alma mater, University of Illinois, they expect an above average yield here in Illinois, but in Iowa, you're hearing, I believe it was Iowa, you're hearing that due to a lack of kernels filling the tips, yields will be lower.
I don't even know how to comment on the kernels.
Yeah, this is a clean podcast.
What they call it.
Okay, yep. Well, it's just the tip, okay? It's not being filled. So we've got that going on as well. And I don't know, about an average around 300 bushels we're looking at in Illinois. And when I'm driving around in the country, going back home, the corn it looks really nice. And it really depends on who you're talking to, what state you're looking at, which reporting system you're going to, and really people should have a good idea at this point. Forecasts have been improving. There's always concerns over frost down the road, but people should have a better idea about where their yields are at this point, more accurate estimates. Now, wheat also.
Real quick on corn, it's come down. It was up near 440.
Yeah.
Now it's all the way down to what, 341? That's
and it's trading high. It's trading higher this morning. The new contract low 338 yesterday, and so people are saying, with Monday being the first trading day in August, we could see follow through selling and pressure there, and that could accelerate to 280. And since we've already fallen to 338, I just don't see it, that 280 figure.
Wow, that would be, we haven't seen anything below, even back in, what was it, 2014, the lows were only 315.
Yes.
We haven't seen 280s. Since '07.
Right. So really what you're looking at is supplies. I mean, that's what it comes down to, global supplies. And the International Grain Council just increased their estimates for global supplies of wheat and corn. And wheat, then, September, new contract low close yesterday at 410. Export sales this week, they were okay. They came in at expectations. They've been a bit rocky this week, but they got most of their spillover pressure from soybeans and corn. Harvest is finishing up the next 2 weeks. And yes, people are pointing to the quality issues. France, of course, worst yields in 30 years, and some reports that they might actually have to import wheat, which is just mind-blowing. South Africa's planted area is the third smallest on record. Here in the U.S., I believe North Dakota, for example, had issues with protein content. Now that's a really interesting thing. You can have tons of wheat. This is something a lot of people in the agriculture industry understand, but when people are saying we have so much supplies of wheat, so there's so much wheat around the world, yet if it doesn't have high protein content, then you can't use it for feed usage for animals, and you certainly cannot sell it to people. So it's basically wasted. Egypt, our largest importer, at one point they will not accept levels of wheat with protein under certain levels, which a lot of U.S. wheat has because of the weather forecasts. And
so protein content is based on weather then? Is that what you're saying? Is that where that comes from?
Well, there are a lot of factors that can affect wheat's protein content, but yes, weather has something, a large factor to do with it as well. But the thing is, even with all of these issues, there are still expectations to see an extremely large world carryout. So once again, with Monday being the first trading day in August, really new lows in that contract aren't ruled out, especially with the higher world production estimates.
You were saying we're trading around the 410 level. We haven't traded at those levels since August of '06.
I mean, weather 100% is constantly a factor across, I mean, everything. Even cold weather, when looking at cattle, that affects their weights. And so we're looking right now at dressed weights. I believe they're going to fall 20 pounds below last year. And so that's a hit to supply. And, but, that means that the market's doing pretty well. There was another rally this week. It kind of came back off the lows in the cattle complex, and it's difficult because there is a downtrend channel that we're seeing in cattle. However, when you're looking out further, there are going to be supply issues. So when those cattle become market ready and they're at lower weights, we're going to see supply take a hit. But really what people are watching are the technicals there that are dominating the price action, just because the fundamentals are so right now. But to touch on soybeans, just because that's, major one as well. Disappointing export sales, cooler forecast with more rain. So yes, they were pressured as well. And the interesting thing to look at, I want to see the CFTC report at 2:30 p.m. Central Time to have a clearer picture of the fund's positions, because I believe right now they're long about 120,000 contracts of soybeans and maybe 60,000 contracts of meal. That would imply that they're holding out, I guess, for something to happen in August. So what's going to happen in August? And some are saying, the carryout is much tighter than the USDA estimates, but that's nothing new, because disagreeing with USDA estimates is quite common. Some say that China will provide strong demand, and sure, it's been relatively good so far, but if we start to factor in that larger than expected crop and disappointing export sales, those longs that I mentioned, they'll certainly be liquidating. So I guess a price point to look at when you're looking at November beans, we close under $9.50. That would open the door to lower prices. Really, with Monday being the first trading day in August, it should be a really interesting week and month moving forward. A lot of things being watched here are, of course, the weather and supply and demand, and we'll get a better look at that in the next few weeks.
Today's edition of The What and the Why is brought to you by Motive Wave Software. Motive Wave Software is a well-established developer of easy-to-use, full-featured charting, analysis, and trading software built for the individual trader. Motive Wave offers the best charting tools used by the pros, such as Elliott Wave, Fibonacci, Gartley, Gannon ratio analysis, but it's presented in a very easy-to-use way. Motive Wave has a product to fit any budget and any trading style. And one of the very best features, it's available on Windows and Mac. So go to pathtradingpartners.com right now to get your 14-day free trial, and then visit them at motivewave.com.
Hey guys, I've got 1% left on my handy dandy little charting iPad here. So I would like to say that, Mike, I think you have a very interesting what this week. So would you like to do your what? And I can do my why.
Sure. Yeah, even though we talked about GDP and, there's a couple positive numbers, there's some negative numbers. Money's just looks like it's going to keep flowing into these stocks. And on a monthly basis, the S&P 500 futures contract looks like it's going to trigger a breakout from a massive horizontal channel that has been forming since the end of 2014. So if that does trigger, and it, based off where we're trading right now, looks like it will trigger. We have a short-term target of 22.30. Right now we're trading at 21.68. Short-term target 22.30, and the full target for this breakout is the 23.50 level. So upon further rallying in these stocks, we could easily see the S&P 500 reach towards the 23.50 level on a futures basis.
Wow. So here's what I want to talk about from a perspective of why. I've talked a lot about the Fed since the onset of this podcast. And one of the things you hear people saying a lot now is that global central banks are losing credibility. And I think that loss of credibility is now being led by the U.S. Fed. You take what Mike said with the potential stock rally that he's seeing in the charts. Most of the Fed governors and the FOMC members talked up September as being possible for a rate hike, good economic numbers that they were seeing that we don't seem to see, at least not as strongly as they do. Here's the problem with Fed credibility. Okay, people talk about Fed credibility and they say, the Fed is losing credibility. What does that mean? Well, that means when the Fed tries to talk a market into something or out of something, okay, like they're doing right now, saying, look, we might get a rate hike in September. We might get one in December. The market doesn't believe them. Right now, the market is not rallying on earnings. The earnings scorecard that we've been looking at is pretty flat. Okay, it's flat to negative. Earnings have been okay. They haven't been great. It's not on great economic news because you could say that economic news is at best 50-50. 50% good, 50% not so good. And GDP, being one of the major ones, is bad. So if stocks are going to continue to rally, as Mike's charts predict, they're rallying on the Fed doing nothing and the continuation of easing money. Japan now owns more than half of their own ETF market. That means that Japan theoretically owns more than half of the country's equities, the country's stocks. That's unprecedented. If the Federal Reserve can't talk the market into thinking there's going to be a rate hike, if they want the market to calm down, or if they want to actually get their credibility back, they actually have to hike rates more aggressively than they probably want to. That, to me, is one of the biggest dangers to the stocks right now. And if and when this were to happen, it's not next week, it's not next month. You're probably looking at this coming to roost sometime in 2017. But watch for more aggressive talk from the Fed that they might hike rates. And that could cause a pretty big downswing in equities after Mike's targets are reached, because I think they will be as well. So you're talking about, I believe, that stocks are going back up, but I believe the Fed is going to have to get really aggressive in 2017. That is my why, and my 1% has forced me to leave you guys now, because my 1% is now at 0%.
Your battery. Meaning you're not a 1%er, but your battery is.
I am not there's two things about a 1%, right? There's the financial elite and then the 1%ers in the biker world, which are the ones that commit crimes. I'm neither one of those. But I am still Bob Iacchino, and I'll talk to you guys next week.
Thank you, Bob.
Allie, thanks for being here. That was great.
Thank you for having me. This was wonderful.
And as always, I have nothing to say.